Hello friends, welcome to our weekly deliberations on equity market. Today is 4th November 2022, timing 4:30 p.m. As you know that the Sensex concluded this week with a modest gain of 114 points and ended at 60,950. Nifty recorded a marginal gain of 64 points and closed at 18117 for the day itself. Friends, the basic objective of this class is very clear. That is, investors must deal with the equity with complete informations on economic development, social development, political development and financial development. Our basic intention is basically to make aware the investors to know what are the major changes that impacted the country, that impacted the world, which might impact the market today, tomorrow or day after tomorrow. This is our weekly program and please follow this program to understand what are the most important factors that are impacting the market favorably or adversely. First important information is that Fed has increased its interest rate by 75 basis points. In the last week we also discussed and expected what would be its impact. But I am happy to inform you that Fed interest rate increase has not really impacted the Indian stock market materially. And you must have seen that today Sensex closed with a modest profit. Now, while we always apprehend the impact in Indian equity and Fed increase of rate, I will just want to give you some historical information which could be very relevant to you. On 16 March 22, Fed increase of rate has really gained Indian market by 1047. Now on 26 January 22, Fed increase of rate has impacted adversely to the Indian stock exchange by 521 points. Again on 4th May 2022, Fed increase has not impacted anything in Indian capital market. On 14th June 2022, Fed increase impacted adversely to the equity market by 1046 points. On 27 July 2022, Fed increase has really impacted Indian stock exchange advantageously and it improved by 1041. In other words, why there is no major change or there is a gain? Because Indian stock exchange or investors have already discounted the probable increase of Fed rate, and that is why there has not been any significant change in the stock exchange index. Second relevant information is the GST collection. As you may be knowing that GST collection in the month of October registered 1.51 lakh crores. October collection means it is for the sales of September 22. Because September 22 GST is to be paid by 28th October. So this figure of 151 is October figure, but it will be relevant to September 22 month. This is a very encouraging result because our collection was in the range of 1.45 lakh crores, but it is because of the festive season, and we do expect that similar trend will be maintained in the November as well as December because festive season is still continuing. Third most important informations for all the shareholders, investors is core sector development. The government has declared the growth in core sector. What are the core sectors? There are 8 industries which are considered as core industries. Which are those industries? Crude oil, refining, steel, cement, coal, fertilizer, electricity. So there are 8 specific industries. Barring crude oil production, India registered growth in all segments. I will tell you what is the overall growth. Overall growth is 7.9% as compared to September 21 figure. This is September to September. Now, if you ask me where are the growth, so therefore, because each industry is related to specific script, I will tell you that the fertilizer industry registered a growth of 11.8%. There are many fertilizer related equities. Coal, 12%, mostly dominated by Coal India. Refinery, 6.6%, IOC, BPCL, etc. Steel, 6.7%. There are several companies in the steel segment. Electricity, 12%. These are the 8 crucial sectors, and barring crude oil productions and natural gas productions, in all 6 segments, the country registered a growth, and the growth percentage, as I have already said, is 7.9%. Fifth important news is crude price. In the last week, when I was dealing with this particular subject, I said that the prevalent crude price was $94.71 per barrel. But today, the crude price is approximately $97.50 per barrel. In other words, there has been an increase in crude price to the extent of $2 per barrel. Mind that as per statistics, every $10 increase will increase your current account deficit to the extent of 0.4% of the GDP. That means India's economy and crude price, these are very closely linked. So, although the price is below 100 and our annual budget for 22-23 was prepared based on USD 65 to $70 per barrel. Considering the existing price, I am not saying it is out of our control, but it is a matter to reckon because crude price affects all industries. Next, sixth information is with regard to IMF's predictions about Indian economy for 22-23 and 23-24. According to the IMF indication, India will register a growth, that is GDP growth, of 6.8% in 22-23 and 6.1% in 23-24. This is what they have predicted. But according to our Chief Economic Advisor, Dr. Nageswaran, the actual increase will be much and much higher than the predicted rate. So this information is a very crucial information. Next is the country's fiscal deficit. You all know fiscal deficit is nothing but the difference between your receipts and payments. But as we find, during the last 6 months, that is April to September, India could contain its fiscal deficit to 37.3% of the budgeted deficit for 22-23. In other words, in a layman's language for understanding, is that 6 months period, that means it should have been 50% of the annual budgeted deficit. But India could contain its fiscal deficit to 37.3% in 6 months. So therefore we can expect that at the year end, our actual fiscal deficit will be lower than the budgeted fiscal deficit, and that is a very, very positive information, because fiscal deficit means more leverage, more loan on the market. The country's total tax collection is estimated to approximately 12.03 lakhs in the last 6 months, that is April to September 22, which is around 52.7% of the yearly budget. This is a very, very important information. Next is the gold demand, which I feel is not a very good news. Gold demand went up by 17% at 146 metric ton in the last quarter. Mind that is a quarter. And gold investments is basically a dead investment. So therefore, this is not a very good information, particularly when the country has increased the custom duty on import of gold. In spite of that, there is a increase in the gold consumption, and you will be surprised to know government is one of the major customers of gold purchase. Now another important information is that transactions through UPI. Now you just note that 730 crore transactions took place in the last quarter, and the total value is 12.1 lakh crores in 1 month, not quarter. In the last month of October, there were 730 crore transactions and total monetary value was 12 lakh 10,000. Next, according to the Morgan Stanley, the agency has predicted a total economy to the extent of $10 trillion in the next 10 years. According to the Morgan Stanley report, the country's digital infrastructure, investments for the productions of the world, an established outsourcing model and energy transitions would make the country to $7.5 trillion by 2031 and would be a third largest economy in the world. Next pertinent informations is my concluding information that I will specify certain companies who have already declared result in the current week. Adani Port had registered a profit of 68%, Titan 34%, HDFC 18% and Bharti Airtel 89%. They have increased their net profit. Now, today, two important quarterly results are expected to come, that is State Bank of India and Britannia Industries, and we are expecting a robust growth in profit as well as turnover in respect of these two companies. Friends, once again I would like to tell you, our objective is not to influence you to purchase any specific shares or selling shares. Our objective is basically to educate the common people, those who cannot read the paper, who cannot really access to the electronics media, to inform that these are the most important economic, financial and social information which could influence the market in the next weeks or in the future period. Just to appraise them, just to explain them, just to make them our. Thank you very much for your patient hearing, and we'll see you again in the next week on Friday at 5:30. Thank you very much.